morning, everyone. It is Wednesday, July 24th, and the Bank of Canada just had their latest announcement on the overnight rate. And it is a good news story today. The Bank of Canada has lowered the overnight rate 1/4 point. So what does this mean? It means if you have a variable rate mortgage, an adjustable rate mortgage, a line of credit, or a HELOC, you're going to see your interest costs drop 1/4. So again, we're seeing some consistent drops happening from the Bank of Canada, and that is a good news story. We're finally seeing rates starting to come down. The reason for this is inflation. We are seeing those inflation numbers get to the level that the Bank of Canada really wants, ideally under that 3% zone, closer to the 2% mark. Why are we seeing that? There's just a slowdown in the economy as a whole. There's some oversupply issues that are causing that. And here's a real interesting thing that the Bank of Canada said today. They noted that lowering interest costs should help housing and shelter costs, which without question is the biggest driver of inflation right now. If we were to eliminate the shelter costs from the inflation numbers, you would actually see inflation in that 2% threshold. So we are likely going to see the Bank of Canada continue to loosen the monetary policy and lower rates going forward. This is a good news story, and we will see what happens in September. If you have any questions, please reach out to a mortgage broker. We're always happy to help and answer any of your questions. Take care.